We are seeing a huge transfer of wealth that most people are overlooking because the dollar is losing value at the fastest rate we've seen in 50 years. As a result, investors are looking for countries outside of the United States to park their investments. And that's why in this video, I'm going to break down where these dollars are going and how this can create an investment opportunity for you. The United States dollar is the world's reserve currency, which essentially means that the entire planet looks at the United States as the safest place to park and invest your money. Well, in August of 2025, JP Morgan Chase Bank published this. Where is the United States dollar headed in 2025? And let me read you the first sentence of this report. In the first half of 2025, the United States dollar fell 10.7%, marking its worst performance in this period over 50 years. Now, to be clear, this by itself doesn't mean that the United States dollar has lost 10% of its buying power. What it means is that relative to 6 other currencies, the euro, the yen, the pound, the Canadian dollar, the Swedish krona, and the Swiss franc, the United States dollar has lost more than 10% of its value relative to these currencies in the first half of 2025. Which means either the United States dollar lost value or these other currencies grew in value, or a combination of both. This drop in value for the dollar has real implications that people and investors are seeing. The first implication is if your dollar has less buying power and now you go to a country where one of these currencies operate that has more strength relative to the dollar, that means when you travel to that country, well, now it's more expensive for you to go shopping. Number two is that if you are a business and you're importing products from these foreign countries, well, now you need more dollars to buy those products because, well, $1 isn't as strong as it was before. Number three is if you're exporting products from the United States to those foreign countries, well, now your exporting is now cheaper because now those foreign countries have more strength to buy more of your goods because the dollar is weaker and their currencies are stronger. And then we have number four, which is that investors are looking for alternatives, which brings me to the next part of this video. What are investors actually doing with this new information? And this is where I want to remind you that my team at Market Briefs has been covering this. Again, Market Briefs is a free newsletter where every day my team is working to break down what's happening in the economy, housing, stocks, crypto, and global markets into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every morning. We have hundreds of thousands of investors that are reading Market Briefs every single day. And when you join Market Briefs for free, you're also going to get an investing masterclass taught by me as a complimentary bonus for free for joining. So if you want to get Market Briefs and the Investing Masterclass all for free, all you have to do is click the link down in the description below. Investors generally want to see a stronger dollar over a weaker dollar, and when you see a weaker dollar, that's when investors start to look for alternatives. And one of the things that we've seen is that investors have been turning to physical gold, which is one of the reasons why gold prices have been breaking new record highs, because it is a hedge against your currency. See, the difference between something like physical gold and our currency is that you can't just print more gold out of thin air. You have to actually go out and mine it, and because it takes physical time, effort, and labor to produce that physical gold, there's inherent value in that physical gold. Versus our currency, you can just print money out of thin air because our dollars are no longer backed by physical gold. And that's why some investors get concerned when you have a weaker dollar and they start to look for an alternative, such as physical gold. Now, I'm not going to do a full deep dive on gold in this video. I already made a video covering that. So if you want to watch my deep dive on gold and why gold prices have been shooting up in 2025, you can watch that video. I'll link it for you down in the description. But we're also seeing investors quietly moving their money outside of the United States into foreign countries as an investment opportunity. Here's what JP Morgan Chase Bank had to say. While long-term United States asset holdings remain strong, flows into United States equities have weakened significantly this year, with some months seeing outright selling, primarily by foreign individual investors. That means, yes, the United States stock market is still strong, but there are some outflows happening, meaning some investors outside of the United States are saying, we don't feel so comfortable investing our money in the United States stock market, so we're going to now take our money in the United States stock market and put it into foreign stock markets. Now, I already know what you're thinking. Okay, Jaspreet, but what does that have to do with me? Supply and demand, the price of anything, whether it's real estate, whether it's physical gold, whether it's stocks, ultimately depends on supply and demand. When you have more buyers for a stock than sellers, the price of that stock goes up. When you have more sellers for that stock, more supply than demand, the price of the stock goes down. Now you might say, well, Jaspreet, isn't it the profitability of the company that's going to impact the stock price, or how much the revenue is, or how fast they're growing? Yes, all of those factors help, but they really just contribute to supply and demand, because if a company's profits are growing, what that means is that there's going to be more demand to invest in those profits. If a company's revenues are shrinking, that means there's going to be less demand and maybe people want to sell out of that stock. So a stock's price is truly determined by the number of buyers and sellers that there are, because there has to be a buyer for every seller of that stock. So when investors are thinking about where they're going to invest their money, this impacts the price of the stock market for everybody. But now let's get into the real meat of this question. If investors are looking for places to invest their money outside of the United States, how can this create an opportunity for you? Let me read you what JP Morgan Chase Bank had to say. For investors, international equities, meaning stocks, and local currency bonds could continue to outperform. You as an investor sitting in the United States have the ability to invest into foreign countries and foreign stock markets, and what JP Morgan is saying is, well, some of these foreign stocks could actually give you higher potential returns. Now, you should remember that investing your money into anything outside of the United States has generally more risk than those inside of the United States. That's the standard rule of thumb. But that more risk also comes with more potential return. And that's what JP Morgan is talking about, that if you're investing in one of these foreign countries, well, you could get the benefit not only of the company or stocks that you're investing in growing, but also if the country is growing faster because it's more of a developing country, there's more growth in the economy, well, that could lead to outsized returns for that additional risk. But where are these investors looking? And according to JP Morgan Chase Bank, it's Europe. European investors, in particular, are allocating more to local assets with European-focused ETFs. Now look, before we go any further, let's make sure we're on the same page, okay? I'm just a random guy on YouTube. I'm not a financial advisor. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. I'm not telling you what to do. I want to present you with what JP Morgan Chase Bank is saying, so you are a smarter investor. And what JP Morgan Chase Bank is saying is you have all these wealthy people in Europe that used to invest their money in the United States, and now those investors are saying, you know what, we don't know what's going on with the States, so we're going to keep investing our money into European markets. How are they doing that? By investing their money into ETFs, meaning funds in Europe that give these investors exposure to European stocks. And this is where JP Morgan Chase Bank says that there could be some potential opportunity. It comes with more risk for more potential return. So if you're an investor in the United States and you say, man, that would be interesting to invest in European countries and European economies, I just don't know how. Let me give you a few examples of ETFs that you can invest in the United States to give you exposure to these European markets. Again, I'm not telling you what to invest in, I'm just showing you how it's possible, if that's something you're interested in. Let me highlight 3 different types of ETFs that way you understand different potentials out there. VGK, EZU, EWG. These are 3 different ETFs that give you exposure to European markets, but they give it to you very differently. Again, an ETF stands for Exchange Traded Fund. These are just funds that give you exposure to a basket of stocks. So instead of you going out and investing in one company, you can invest in an ETF like this, which will give you exposure to dozens or hundreds of companies, sometimes in a particular niche. These ETFs are very niche, meaning they give you exposure to a very specific thing because they give you exposure to European markets, but in very different ways. For example, VGK is an ETF created by Vanguard that gives you exposure to European countries in major European markets, and there are more than 1,200 stocks inside of this ETF that you'll be getting exposure to. EZU is created by BlackRock's iShares, and if you invest in EZU, this is giving you exposure to developed Eurozone countries that use the euro, and there are 220 stocks in the EZU ETF. Or if you wanted to get even more niche, EWG is another ETF created by BlackRock's iShares, and this ETF is giving you exposure specifically to the German economy. So if you wanted to invest only in Germany, this ETF is going to give you exposure to 53 stocks, 53 companies in the German economy. So if you wanted to invest in Europe and you don't live in Europe, well, it is possible in the United States by investing in a fund that gives you exposure to those European economies. However, you got to remember, investing inside of the United States comes with more risk because now not only do you want to see the country grow, you want to see the economy grow, And then you have to think about also currency changes, because those currency fluctuations can also impact the value of your investments. So you need to understand what your investing strategy is and make sure that you build a strategy that actually makes sense for you, because the mistake that a lot of people make is they say, I want to be an investor. And then you start to hear some hot news about certain things that might be coming, and then you dump all of your money there. And then if things don't go your way in 3 months, you sell everything and now you become a trader, and you really don't have any strategy. You don't know how much you want to be allocating to the S&P 500, how much you want to be allocating towards tech and growth, and how much you want to be allocating towards income and dividends. This is where I want you to understand what's happening, but also know what is the strategy in the game that you want to play. That way you can build a proper portfolio that makes sense for you. Again, if you're an investor and you want to stay up to date on what's happening, when it's happening, you can join Market Briefs, which is my free newsletter for investors, and I have that link for you down in the description. Historically, gold has been a horrible investment. On this chart right here, gold is the blue line and stocks are the red line. And you can see that historically, stocks have really outperformed gold. But recently, that's changed. If we look at more recent history, in 2025, gold prices have begun outpacing the stock market. Here's why that's so interesting. When you invest